Welcome to Channel's Business Global with me, Juliana Olayinka, from our studios here in London. Over the next half an hour, we'll be looking beyond the business headlines by giving you in-depth perspective on the stories that are affecting all of us. Coming up on today's show, with more than half of people living in Africa having no access to banking facilities, a new report published by BPC Banking Technologies has outlined the current market environment and characteristics of successful newcomers in the present competitive landscape. Frank Moller, the firm's managing director and head of Sub-Saharan, will be joining me from Nairobi for some analysis of their findings. And in the wake of the scandal involving Roman Abramovich, his links to the Kremlin and his removal as owner of Chelsea Football Club, leading voices in the game have said that English football has reached a now or never moment, and the game's history, heritage and traditions must be protected. Current affairs analyst and former footballer Michael Potter will be joining me from Manchester for his view. Then later, I'll be looking back at some of the biggest business stories of the week. But first, as always, let's start the show with business news from here in the UK, where on Wednesday morning, the Office for National Statistics revealed that inflation rose to 6.2% in February, up from 5.5% at the start of the year. According to the Bank of England, inflation is on course to hit double digits later this year, as consumer prices have been hit by higher energy and food costs that have been made worse because of the war in Ukraine. Meanwhile, Rishi Sunak has defended his spring statement amid criticism that he is failing to help those who are unemployed and on lower incomes. The Chancellor cut fuel duty by 5 pence per litre and raised the threshold at which workers start paying national insurance from £9,600 to £12,750. A leading think tank has predicted that 1.3 million people will fall into absolute poverty next year due to the country's growing cost of living crisis.
From this July, people will be able to earn £12,570 a year without paying a single penny of income tax or national insurance. That is a £6 billion personal tax cut for 30 million people across the United Kingdom. Today, I can announce, for only the second time in 20 years, fuel duty will be cut. Not by 1, not even by 2, but by 5 pence per litre. The biggest cut to all fuel duty rates ever. And while some have called for the cut to last until August, I have decided it will be in place until March next year, a full 12 months.
Well, earlier I spoke with our business correspondent Simon Pusey for some analysis. Simon, this week's spring statement felt less like an update and more like a mini budget, but it hasn't gone down too well with too many people, has it?
No, opposition parties attacking the Conservatives and Rishi Sunak for not going far enough in terms of tax cuts and tax breaks, especially for those on low-income earners. He has done a number of things. So the main headlines is a 5p cut to fuel duty, obviously petrol very expensive at the moment with oil being so high and the crisis in Russia, a rise in national insurance threshold and the promise of an income tax in 2 years' time. Those are the sort of headline figures. But opposition parties saying that doesn't go far enough for the lowest earners, especially with the cost of living crisis that we're hearing so much about and inflation rising massively. The Shadow Chancellor saying that he should have scrapped the 1.25% rise to national insurance. A lot of people saying that was interesting that he didn't do that while also introducing these other 3 things. The Office for Budget Responsibility saying that inflation and higher taxes from April mean households face the biggest fall in living standards since 1956 when records began. So a lot of opposition parties saying that he's sort of tinkering around the edges, and also a lot of unions, Unite General Secretary saying that he's tinkering around the edges of cost of living, saying he hasn't done enough to tackle the corporate elite. But I think he would point to the fact that, we've had this pandemic. He came out of the pandemic very well, of course, with, furlough scheme, and a lot of people saying that there's a lot of generosity there. He's saying he can't do everything. So he was saying that he may come out with more financial support in the future later this year to tackle things like energy bills, which are, going up a lot, and the cost of living. And I mentioned inflation, it's nearly 8% now. But for example, universal credit, their benefits will rise. People on universal credit, their benefits will rise just by 3%, but inflation has gone up to nearly 8%, so it doesn't really make sense. So I think it's a hard one, obviously, to balance the books, and the Conservatives have always been the party of fiscal responsibility, right? They want to compare themselves to Labour, that they say spend and spend. So they obviously want to be seen to be responsible and sustainable in terms of this budget. But yeah, a lot of other parties across the aisle saying, look, cost of living is going up and up and up, inflation going up and up and up, and this isn't really enough for low-income earners, for people who are struggling to pay their energy bills. But Rishi is saying, look, in the future, I may, in budgets to come, he may give further sort of benefits to people. But I think a lot of people in the House who aren't Conservative are saying that this is not enough for people who are struggling.
Are ordinary Brits feeling the pinch, Simon?
Well, definitely in terms of, mentioned petrol there, that 5p cut to fuel duty, that's not much if you're filling up your car. The energy bills are going up so much, partly because of Russia and the crisis in Russia, but also it was always going to happen. So I think a lot of people are saying, why have there not been a few more incentives for people who are facing, energy bills crisis? Why is there not more being done for people on universal credit? And I think, you're seeing food prices rising. Generally, the cost of living is going up a lot. So I think people are starting to struggle. And I guess the hope is that despite the Ukraine-Russia crisis, is that the economy continues to grow and grows faster than it is at the moment, and people can sort of make it by jobs. People are in jobs, but I think that the median pay at the moment is not what it used to be.
No, wages are slowing, aren't they?
Wages are slowing, people are in employment, and the economy is growing, but I think, most people would say that they need a little bit more help if they're low-income earners.
Absolutely. Thank you, Simon. Now to our next topic. According to a new report titled Digital Banking in Sub-Saharan Africa, 57% of Africans do not hold any kind of bank account, including mobile money accounts. As digital-only banks have rapidly emerged over the last decade, with the vision of providing more accessible and equitable banking services, Africans are in a prime position to benefit from this financial evolution. Well, for more on this report's findings, I'm now being joined by Frank Moller, Managing Director and Head of Sub-Saharan at BPC Banking Technologies. Frank joins me from Nairobi. Frank Moller, thank you so much for joining me on Channel's Business Global. So can you give us a snapshot of what the digital banking market looks like in sub-Saharan Africa right now, and what are some of the implications from the findings of your report?
Thank you very much for having me. I really appreciate it. Digital banking is a global movement which we have seen, which has been accelerated during the pandemic with the need to serve people remotely. And when they need it the most of the time, like we saw, there are now over 450 digital banks worldwide. And the beauty of these banks is that they fully serve their clients without any physical branches. And most commonly, the mobile is a prime touch point with the bank and to transact on the self-service. Now, I'll tell you, Sub-Saharan Africa is home to close to 21 of these new generational banks. While most can be found in South Africa and Nigeria, we are seeing banks rising in other markets, and we believe that the market is ripe for the success. I mean, if you think about almost 57% of the population remains unbanked, this one gives us the potential to see that the time is now and it's ready for these digital banks or neobanks, so to speak.
Absolutely, Frank. You mentioned the pandemic. We all know that, of course, even in the West, we all had to become digital. But how are newcomers into the arena going to persuade, as you said, 57% of that population to become online? Can they get online? Is the infrastructure there? We know Africa's informal economy is robust. Lots of people enjoy the fact that they're using cash. Do parameters need to be put in place to make sure that this transition can happen swiftly? Does it need to happen?
I mean, totally amazing question. I mean, think of it from this perspective. Our population in Africa is quite young, with a median of 19 years in Africa. Now, West Africa is at 19 years, medium, Central Africa 17 years, Southern Africa slightly higher, 27 years, and Eastern Africa 19 years. They are all accustomed to one thing, which is the mobile phones. And also these people spend a lot of time on social media. Therefore, they expect as much interactivity with the companies they're dealing with. And this does not exclude the banks. So the success of these neobanks, or sometimes people call them digital banks or challenger banks, is in the value they propose. The fact that it is much more cost effective to run a digital bank that does not bear the cost of brick and mortar branches and taps on digital and automation, makes it possible to offer banking services that can be much more accessible, such as competitive transfers, free deposits, faster money movement, or even withdrawals and more. So by only providing such value, the digital banks appeal to customers and can help them move from formal to informal economies.
Yeah, that's very important. You mentioned bricks and mortar, Frank. I have been hearing some rumours that there's a little bit of tension between some of these really successful fintech firms. We've all seen the pictures on Twitter, haven't we? The millions of pounds, dollars that they've been raising from hedge funders. But there is a clash because, of course, there's the established way and there's the new way. How is this affecting the market?
Well, I mean, when we think of fintechs, and for long, I'll tell you that banks were competing over the same rules with fintechs. And these newer banks, the experience is even much more superior, right? They are fully and truly disrupting the market in their thinking. Now, fintechs tend to solve a critical business problem. And this we see is focused on one, and to do that very, very well. It's just the focus on one thing. For example, some might focus on supporting the agri sector and farmers, and this is just to help them bridge their financial needs. But the one thing I also want to emphasize on is fintech is often seen today as the new marriage of financial services and information technology. So the fact that they bring innovations, it has also fostered a healthy market, healthy competition, and ultimately, we are seeing that customers are the ones who are becoming the beneficiaries from all this, despite all the disruptions that we are seeing in the continent. Absolutely.
What about another disruptive sector, if we would like to call it that, which is crypto? We know the market in Africa is growing. It's surging, I think even more than some analysts had previously forecast. There were suggestions a couple of years ago that Mark Zuckerberg's Libra would help alleviate some of the struggles that the non-banking part of Africa would have. That obviously has been scrapped for now. But are BPC starting to see that more clients are showing interest in crypto?
Wow, great question. Very great. I mean, our position is to be an enabler to the financial institutions, to be able to provide payment solutions that blends both crypto and fiat currencies together. And this is because their customers want to be able to use their digital currencies in the real world. Now, the potential for Bitcoin or the crypto in Africa is particularly good, with close to 60% of the world's mobile money already passing through the continent of Africa. There's some disclaimers that I want to put across as well. Central banks have remained cautious as this is an unregulated market that can disrupt their model and the stability of the traditional financial system, while others believe that crypto can be the solution to higher local currency volatility and also financial inclusion and more. But I must also add that the spread of cryptocurrencies in Africa has so far centered in two countries that we are seeing, that is Nigeria and South Africa, where nearly a fifth of the population owns some form of digital assets. So in a nutshell, the growth in ownership is impressive, and crypto will continue to blossom in the continent. That's how we are seeing it.
Absolutely. Before I let you go, Frank, I've got to ask you an important question, which is what is the key to a more inclusive digital economy? Because there are so many nuances, aren't there, when you're trying to kind of not necessarily, but copy and paste what's happening in the global north to the global south. When we're talking about financial literacy, we're talking about gender inclusion, we're talking about access to credit, even when it comes to, you know, climate change. It's not always easy to follow the rules that are set from people millions of miles away. How can we be more digitally inclusive on the continent?
Again, totally amazing and brilliant question. Now, on this one, we totally have to think outside the box and bring the ecosystem players together. And I'm talking about banks, I'm talking about fintechs, I'm talking about telcos, microfinances, and for sure the government, and we cannot leave the regulators out. Now, the core issue we have are around infrastructure, like you've said, access, and also identity. The drive for digital identity adoption has proven to be successful in some countries, such as South Africa, but many others are lagging behind.
Frank Moller, Managing Director of Sub-Saharan Africa at BPC. Thank you so much for sharing some fascinating insights from your recent report. Thank you, Frank. Coming up on Channel's Business Global, I'll be speaking with the current affairs analyst and former footballer Michael Potter about the future of English football. And I'll be looking back at some of the biggest business stories of the week. See you after the break. Welcome back to Channel's Business Global with me, Juliana Olayinka, from our studios here in London. In a moment, I'll be joined by the current affairs analyst and former footballer Michael Potter. But before then, here's some business news for you. Saudi Aramco, the world's biggest oil producer, has agreed to meet the oil and gas demands from the West. Over the weekend, the state oil firm reported $110 billion in net profit in 2021. This is up from $49 billion a year earlier. With UK petrol prices soaring because of sanctions on Russia, Prime Minister Boris Johnson flew to the Middle East last week to persuade oil-producing countries to turn on the taps. Saudi Arabia has pledged to increase its capital expenditure by about 50% this year. US President Joe Biden has axed tariffs on British steel. The 25% levy will be scrapped from June and comes 5 months after the White House abolished measures against steel from the European Union. The tariffs were first introduced in 2018 under former President Donald Trump on national security grounds. Duties on Japanese steel sent to America will be abandoned next month. According to Russia's economic ministry, annual inflation jumped 14.5% last week. This is the highest level since late 2015. Official figures show the price of some household staples, including sugar, are surging. Inflation is set to keep rising in the country, where the ruble has weakened since the Ukraine assault was launched a month ago. The value of the currency has dropped by as much as 22% this year. In the wake of the scandal involving Roman Abramovich, his links to the Kremlin and the removal as owner of Chelsea Football Club, the UK government has been urged to commit to legislation that will reform ownership and allow fans to have a greater say over how their local teams are run. The Mayor of Greater Manchester, Andy Burnham, has said that English football has reached a now or never moment, and the game's history, heritage and traditions must be protected. Well, for more on this, I'm now being joined by the current affairs analyst and former footballer Michael Potter. He joins me from Manchester. Michael Potter, it's always a pleasure to speak with you on Channel's Business Global. It's been about 3 weeks now since the unprecedented removal of Roman Abramovich. I know you were a professional player yourself. Can you just, in your assessment, tell us what you think this move has done for the morale of not only the players, but of course the fans and the staff and everybody who's a lover of the Blues?
Yeah, I think it's, I've had a number of phone calls asking me what's going on at Chelsea. And, you know, when something like this happens, what it does, it creates uncertainty. And I think uncertainty is the right word because, you know, like any big business that's about to be taken over or sold, you know, there's always the worry, you know, who's going to come in, what's going to happen, will I still have a job, so on and so forth. And this unique situation where, you know, the owner, Roman Abramovich, has been sanctioned by the UK government. I mean, it's not happened before. You know, this is all new. And of course, it's reverberating down into the system, into the players, the employees. There's 100 people employed by Chelsea Football Club. And not only players, non-playing staff, you know, they're all worried as to what's going on, you know, and, you know, it's a big concern. This grey area we've got now, this lapse, you know, no owner, 6 bids coming in, and, you know, who's going to buy it? What are the rules going to be? What can we do? What can we not do? It's just the uncertainty that it creates. And I think this will affect some individuals more than others, of course. And the manager, Tuchel, you know, he's been asked countless times, you know, how is it affecting you and what are your views on it? Well, you know, sports and politics are things that should be kept apart. But unfortunately, you know, on this particular occasion, that's not happening.
Absolutely. You mentioned sports and politics. You also mentioned a grey area. Recently, there have been so many headlines suggesting or asking, is this the reckoning for English football? I believe there was a match between Newcastle United and Chelsea. I believe Newcastle was owned by the Saudis. There was an execution recently, 81 men were executed for crimes in Riyadh. Should it be a reckoning for English football? Do you want football to have these conversations? I know a few people like Gary Neville and what's the other one? The Match of the Day guy, Gary Lineker, the Garys.
Gary Lineker.
Yeah, they often do, comment on politics, don't they? Do you think we need to be having these conversations, looking at, hang on, where is this money coming from?
Yeah, I think it's a very good point. And, I mean, Newcastle going back 12 months ago when the proposed takeover for the Saudi Arabian consortium that eventually bought it was announced, there was a lot of opposition against this. Where's the money coming from? Who is the benefactor? Is it the right thing to do? And it got beyond the club. It got beyond the remit of Newcastle, and it went up to the Premier League and to the Football Association. And then all of a sudden you start to talk about due diligence. Because people have got money doesn't necessarily make them the right owner of a particular brand. And the problem with football is that in some areas, clubs are desperate for money. And if due diligence is not undertaken properly, then all of a sudden you'll find the owner is not the right sort of person for the club and the brand. And of course, I think, since Newcastle, we've now had Chelsea facing a similar problem. And clearly it's bigger than any club. So I think, the Premier League and the Football Association really, in their wisdom, need to set about giving some clubs some guidelines and some plans and some policies in terms of what is acceptable and what's not acceptable as we move forward into the future.
Absolutely, really good point there. Mayor of Greater Manchester, Andy Burnham, he's also, as somebody shown lots of interest, he's calling for government legislation to secure the future of English football. I didn't know it was in trouble, but he wants to ensure that fans have a greater say in what you were saying, who's taking over the club. Do you agree with that?
I mean, there are some clubs already. I mean, I was at a game over the weekend, Crewe versus Bolton, and I was talking with some of their supporters at Crewe Alexandra in the Midlands, and they were telling me the club's now owned by the fans.
Wow.
They've bought the club as a consortium. So down in the lower levels of football, where there is struggle for money and cash, not necessarily the Premier League, that there's already supporters that actually own clubs or have major stakes in clubs. John Terry recently announced that Chelsea fans should have at least a 10% golden share in Chelsea Football Club as we move forward. That's fine, but the problem is it's an auction that's happening now. Chelsea's for sale. It's got one of the best brands in the world. They're world champions, European champions. There's 6 bids coming in from multi-billionaires all around the world. And some of them might not be in agreement to giving 10% of their shares away to supporters. So again, this needs to be debated.
It does need to be debated, and you're right there about the frenzied bidding that came in for Chelsea. I think we're going to get a shortlist soon. Nick Candy appears to be the front runner at the moment. I can't let you go, Michael, without asking you about Nigeria versus Ghana, 2 teams that cause pain for so much and hope for so many others. They've got a FIFA World Cup eliminator match taking place Friday night, Tuesday night.
Yeah,
who's your money on?
Well,
be careful, Michael.
I've got my feet in both camps here. Ghana and Nigeria, they should both have really qualified already for the World. 2 very strong football nations. That we start off tomorrow in Kumasi, and then we go to Abuja on Tuesday. It's 2 games. Both teams are equally capable of beating each other, and it's hard for me to say who's going to go through here. If I say Nigeria, I'm going to upset Nigerian fans, and if I say Ghana, if I say Nigeria, I'm going to upset Ghana fans, and vice versa. So it's going to be a very hard one to call. New managers coming in, new setup, new faces in the squads. I wouldn't like to say. I'm non-committal on this one, Juliana.
I'll answer for you. Nigeria's got our money all the way. Michael Potter, current affairs analyst, former professional footballer. Always a pleasure speaking with you, Michael. Thanks so much for joining me on the show. Well, sadly, that's all we have time for today. But as always, do get in touch with your comments and suggestions. I'll see you at the same time next week for more in-depth business analysis on Channels Business Global. Goodbye.